Okay, let's look at the bias game. Um, okay, guys, can you excuse me for a second? I need to step out. But meanwhile, look at this work done by Simon. I just want you to kind of, guys, see what kind of analysis Simon was doing here. All right, thank you, guys. Okay, so first of all, I really like how Simon analyzes a lot of the significant bars, and there is always label into the bars. So that looks really great. Also, Simon, I'm really liking how you segment in the chart. And I was wondering, what is the how do you segment this based on what? So that would be very interesting. I would be thinking segments based on the price action. Yeah, that's what I was thinking. I was thinking, segments that have specific uh, common textures, elements, right? So for instance, I could definitely see how this segment, had a lot of momentum, right? We could see this in the reaction as well. Then we definitely in a different segment right here, where reactions are a little bit different, although both of them look similar in the terms of the structure, how the structure develops with the higher highs, higher lows in the reactions as well, and then definitely a speculative run. Then, okay, segment 4 probably would have also, sub-segments, a lot of volatility, very high volatility, and then low volatility in phase B, and then yeah, I would agree this was segment number 5. It's interesting that I've asked you guys in the class last time to give me your bias, and everyone said accumulation. So it's interesting, to come back to that thought. What was the main reason why, from the first glance, that looked like an accumulation, guys? Can you identify that thought? Can we come back to that thought and kind of dwell on that a little bit and analyze it? I mean, what were we seeing 1 week ago in the bias game? And while you're thinking about this, let's go through some of the questions here. So for this trading range, in a smaller trading range in the reaccumulation, I found it difficult identifying the phases if the chart unfolded in real time. In real time, I'd label it as per below, but if I had a historical chart, I'd label it differently, as I'd label it backwards, identifying phase B, then C, then B, and then finally A. How would you approach this? Obviously in real time, because that's what's interesting. Right away, let's identify everything first on the daily. The fact that the price overcomes the points of resistance suggests that this is a sign of strength, and then a retest suggests a backing up action. So therefore, the previous low to that is going to be phase C. The two points in phase B are going to be the high and the low, and then bind climax, automatic reaction, secondary test. So yeah, I would probably be thinking that this was what it is. But phase B here is not necessarily the largest phase, which I don't like. You could be thinking that this is a small distributional range, and then your phase A kind of starts here. So that way your B expands a little bit. That probably would be appropriate. Having said this, I would really look into the intraday picture of this trading range, and I'm sure that we would have found more volatility. We would find the structure here, structure in the middle, and together, that might be a more comprehensive trading range for us. There is less supply at B24 compared to B23. Does this mean price won't have any issues moving up past this level at the rally? Okay, so this action right here. Or supply has been exhausted, indicating a successful test where price can now be marked down. Well, interesting. Okay, so we're looking at the supply here at B23 and comparing it to B24. Oh, Simon is saying B27 to B26. Okay, so let's retake this. Okay, B26 to B27. Okay, got it. So this, and then this, right? Is that what it is, Simon? This too? Okay, so first of all, it's great when we are finding the analog bars. We could probably think about this also being an analog bar, kind of like a rally and then a doji type of bar. Right? This could be the same. In a way, this is also the same bar, it's just more way extended, but it has the same principle. So we'll come back to this bar. So you could definitely identify those, and it starts all right here. So you kind of see all of these bars are having what they're having: increased supply signature, and then there is some kind of reaction. Increased supply signature, and then a reaction. So this is just a stop in action. Increased supply signature, they are selling into it. So just based even on that, you could say, okay, well, they sold at 24, then they sold twice at 22, and then they started selling even at the lower prices. And then on the way down, you could even think about, let's say, area like this. So they are selling at this point. It's a value zone of where they are selling, right? So the highest value zone where they sell, and then they go lower and they start selling here, here, and then here. Here's your next selling value zone. So you would be thinking that every time the price tries to go up, it meets some kind of resistance. And just based on that resistance, where you know that there is some selling, you could make a determination for the bias. And obviously, you see the selling in the way how the price behaves on those bars that Simon identified for us, and then how the volume signature also confirms the presence of supply. And then you put two together, supply is present, the price went up into the buying climax, tried to do this again, failed, tried to do this again, failed, and then the failures started to happen at the lower level. So the price did not even come back to the previous level where it was encountering resistance before. That's a weakness by itself. So then we have to look into this area as our final determination here. Okay, well, what do we see? Again, this rally has this volume signature. This rally is ending up in this volume signature. This rally ends up with this, and then this rally ends up with this. So there is, again, the same pattern where supply is present. We don't even have to think about by how much supply increases, although, on the last rally, we could say that supply, increased somewhat relative to what we've seen here. Definitely a very exciting bar to the upside. And I think that in a way, and together with how maybe in a way volatility diminishes, it kind of shows this cup and handle pattern with the local higher highs, higher lows, gives us a suggestion on the decreasing volume signature that, this is going to be a reaccumulation and we're going to see higher prices. Well, again, whenever you look at the chart like that, that's the first impression that you're going to get. And I think that last week's answers in this class shown us that the first look at the stock could be very deceiving. And usually we kind of go into our memory bank, and we based our first bias on that memory bank. And that's what we saw. But I'm so pleased to see that throughout the homework, a lot of you have changed your view. And a lot of you have said, I have thought about this, I analyzed, and like Simon is showing to us here, there is an analytical process as how he does this, right? So bar by bar, segment by segment. And by the way, Simon was very, very consistent, throughout this whole semester in his bias game because the process was there. The process of how, he was analyzing it. I want you guys to keep a tally on how many hits and misses you have for the bias game. Last cycle, when we did that, it was very revealing for those of you who were there in that cycle. You guys saw the benefit. You kind of, and I told you at that time, whatever the rate is for your bias game, that's probably your actual real no BS type of look at where you are knowledge-wise and skill-wise. And then, this could be a very truthful answer to you as to whether you need improvement or not and where improvement is needed. So please don't overlook this. This is very important. Look into that rate. Email me. You don't have to email me, but if you email me, I want to know. I want to know, what this is. Okay. Well, let's quickly answer the last question and go to the next section of the bias game. This is a significant bar to the upside when we're assessing if price commits above the last commitment to the downside, which was here. I assume this, okay, so I forgot, Simon, what was that? A last LCD? Last commitment down. Yeah, last commitment to the downside. Okay, so new acronym here. I assume this last commitment to the downside is a significant bar. Additionally, which significant bar, A, B, or C to the downside are we using for price to commit above? We usually would be looking for the close that would be kind of like open and committing below the last commitment, the last support. So this close is below the low of the previous bar, so we see the progression of the commitment to the downside. Here, this is our support. We don't have the close below. We have the close actually above. So therefore, you kind of have a dilemma here. Do you wait until the reversal of this bar right here? But we wouldn't be even thinking about opening the position here. We only would be thinking about the reversal in terms of this is a buying climax, this is automatic reaction, we are waiting for the secondary test. This bar is a reversal bar. It does reverse this last bar to the downside. But even though this is a significant bar, it doesn't commit below, which basically shows you demand is coming in and there is some strength. You can expect the rally. Anything above the high of this bar, I still would be considering kind of like a semi-reversal. And then at the close of this bar, most likely I would be saying, yeah, the reversal has happened just because of how multiple closes were reversed. 4 last closes were reversed on a single bar. That bar shows a lot of momentum. Is it the most recent significant bar we use? Yes, absolutely. The last significant bar that we want to use. B23 does commit below which bar? B23. It doesn't commit below any significant bars. The close is above. All right. Great. Thank you, Simon. Let's go to the solution. So this was advanced micro devices in year 1997. When you look at how the price unfolded in the structurally, it kind of makes a lot of sense. Climactic run, very well defined. Change of character, suggesting still reaccumulation at this point. There is really not a lot of structural damage that we see here. It's what comes next. Deterioration of the demand. And then we have some kind of ease of movements where we're creating smaller minor sign of weaknesses. And then we definitely see a lot of supply coming in on those volume spikes. And even though this bar looks so bullish, what do we accomplish? Do we overcome the previous points of the resistance? Only local points of the resistance. And then look at after the commitment what the price does. We would, if we were thinking that this is a sign of strength rally and this is specifically a sign of strength bar, then what's the next action? Well, indeed, we could have some testing action. Like think about a gap and then a testing action after the gap, or a big price movement and then the testing action after that was the continuation. Well, here we could expect that maybe for the first initial 4 or 5 days. But then after that, as the price falls through the whole body of this bullish bar, we should be alerted to what is going on or what is not going on. This is not how the price would behave necessarily in phase D. There would be a demand that would push the price up, and there is none. So the price just falls down. This non-availability of the demand just tells the story. Okay, Next bias game. This is where you guys, is that the chart? Okay, yes, this is the chart. Um, this is where you guys are kind of like on the cutting edge. So Twitter doesn't know this chart yet, and you have a heads up as to what's coming. So let's think about this for a second. I want you to give me the answer. What do you think the bias is here? I want you to write it down. First answer is in. All right, guys, I just want your first impression. Don't think about it too much. Write it down. If I have to ask you, and you have to give me the answer, give me the answer. Okay, I'm just gonna read those through. Just keep going, keep going. All right, so we have 1, 2, 3, 4, 5. 1, 2, 3, 4. Okay, so we are about, for those who answered, we're about 50-50 on the redistribution and accumulation. So I think that this is more in line of where we are, just generally as a group and as a class, like 50-50. And then we're kind of going through the mistakes, learning the mistakes. All right, guys. Well, this is your next bias game. This is your next homework. So you can find the answer on Twitter on Friday, or you could just wait until the next week and we'll go through this chart. All right, next question. Let me just look at the time, 4:30. Actually, let's come back to this. This is going to take some time. Let's quickly go through the market update. So really nothing here of big significance. We are waiting for the Fed for tomorrow to see if they're going to cut the rates again. If they do, most likely it's going to be 25 basis points. That's kind of like the consensus. That probably will propel the market higher on the liquidity availability. And that should be good for oil as well. This should be probably not as good for gold. So I'm expecting gold to have some kind of short-term decline. We'll have to see about that. VIX is staying still in the low part, so there is no danger so far. We have not seen this since mid of September. And then Bitcoin, it's a very interesting conversation now with the Bitcoin. What does it really mean? What did technically happen? So what did happen? We have a gap, and now we are in a test. So it's almost we are in the same position as on that bias game, where we had a big positive news move up, and now we are testing. So think about the two scenarios here. The most favorable bullish scenario is going to be a testing at this level, not giving up any ground, and then continuing to the upside. That would be extremely bullish. And then bearish would be just little by little coming down and eating up all of the gains that were produced by these 2 days. And that would be extremely bearish. and we would see a continuation. And I want you guys to think about the Bitcoin from the perspective of the trend, because technically we're still in the downtrend. So we had a reaction on a lot of volume into the resistance. We still have not overcome the previous points of the resistance, and not even the one that where we have seen a lot of selling. So the bias is still to the downside technically, and we just need to see how the test is going to develop. Okay, let's come back to questions later. Let's look at the anatomy of the trade desk. From Sean, I thought that was very interesting. Sean was looking at two analogs of how, and let me see if Sean is here. Sean is not here. How the price ends its movement in the swing. So look at this distribution, look at this distributional top, look at this distributional top. So that's what I'm kind of thinking Sean was looking at, and then the breakouts out of those and how they're, different in a way. So yeah, let's look at this a little bit, with more details. I love this analogy, Sean, because we are starting with this stop in action that has the same type of characteristics where the volume signature expands, and we are going into the overbought condition in the price cycle. This one looked kind of similar as well. Okay, and then we are going into the trading range. We have that in all three instances, and then out of the upthrust action in all three, we have a sign of weakness, and that sign of weakness is going to be always on the increased volume signature, and is going to have that type of bar that's going to be expanding, like big spread expansion. And also we're going to start committing to the downside in some way, shape, or form below the different type of supports, like this, like this, like this. So they are similar. Now, what are the differences? Let's eliminate this one right away, because as we're making a slight lower low on the spring right here, we're continuing to the upside. So this looks more like a whole pattern of the reaccumulation rather than a smaller distributional top and then a reaction to the downside. So we're only realistically looking at two. And now with both, what do we see? Let's look at the first one. So a lot of volume comes in, supply comes in, reaction, continuation, and look at what happens next. There is a diminished volatility characteristics on the way down. Volume is diminishing. Price stabilizes and then reacts to the upside and goes into the oversold. What do we see here in the second example? Increased supply signature and then diminishing volatility characteristics, stabilization of the price, and with the retest, some momentum coming in. We see it also on the rate of change. And suggestion here is what? Is that if this is the analog, we're probably going to do something like this. Something like this. Think about the market also in general. Think about the leadership of the market. I mean, this could be an interesting spot. But having said this, I think that we need to discuss the actual, tactics here. Are we in the correct timing zone right now for this particular stock? Ronnie was looking at TTD, and he was taking some counts here. So this is 1 point reversal. Is this a $2 box size, Ronnie? Is this what it is? Oh, Ronnie is not here. I think so. 2 box size, 1 point reversal, yes. 62, 243 as an LPS, 179, and we are hitting that. Okay, great. So PNF is showing us that maybe we have some counts that were hit. I would be taking the counts here, conservative counts from the top up thrust up to this point where supply has occurred. So that would be the first one that I would take. And then the second count, I could segment it, taking this count first and then expanding it to this one, and then including this one. So 3 segments, 1, 2, and 3. Well, what I like about this reaction is kind of the way where it lands. Again, something that we will be discussing during the November special. This will be the material for us. I want, if we look at the momentum, we're seeing deterioration in the momentum signature in the last, about 6 months or so. We have potential breakout here, and that's why, this is very attractive. This is also attractive because we recognize and think about this. I put this whole price in this whole price history. Think about the price cycle, where we are in the price cycle for this stock. This was an IPO, original accumulation, initial momentum up, and then we go through a prolonged consolidation, smaller consolidations, distributional overbought top, here as well, and then this one right here. So we are at this spot in the price cycle. We are at the point where we're touching a long-term oversold condition. And, what would be those type of characteristics that we would see during this type of era, especially, the first times where the price touches the moving average. Look at the momentum, deterioration in the momentum signature. And then we go into somewhat of the oversold condition. And then we recover from that as momentum comes in. And then we are producing a more meaningful sign of strength, backing up action, and off we go. So I wonder, what could happen here? Would we go up right away, and momentum would just carry us up? Or would we be thinking about some kind of formation? And I think that's what we need to figure out as, as a class. You also could look at the relative strength, right? So quite defined outperformance on both of the legs, oversold. So we also need a signal like this. All right, so with that, and I'm not going to launch the poll, so give it to me, just based on all of this analysis that we have. And by the way, let me just bring it up so that you would see the final price that we had today. Okay. So let's just vote and write it down. What would you do? Would you enter a position here? Would you do nothing? Those are the only 2 choices that we have, just because we don't have the position yet. So what do you guys think? And we'll just go with that based on the vote. Okay. All right, interesting. Okay, so we have two type of proposals. We we have a proposal which kind of dominates here, to do nothing. Um, and then also to open a swing position. I'd be thinking also to open a swing position. Just I'm looking at this and I'm looking at the way how the price, how the volume and the momentum starts to interact. And this is something what we're going to do in the November special. The price starts to move a little bit better to the upside. Would you say that there is more momentum, let's say, on this rally than on the previous attempts to rally, like this one, this attempt right here? Yeah, for sure. This is where momentum has increased. Even on this rally right here, we see how the spread is actually acting much better. And then we see that in the momentum signature. And then with the new rally, again, off the moving average, with the increasing demand characteristics, momentum is there. So the volume that comes in identifies the change in effort to the upside, so it's increasing, not a lot yet, and that produces two things. We definitely have a change of character, so this downswing is done, and we could expect some kind of attempt to rally. Where would we be rallying? Very natural place for us, 270, 280. That would be your swing trade. I would take that. I would not necessarily make it my main position, but at the same time, I also would be thinking, this is on the price cycle is so favorable as a place. We're basically here. So what is the argument here for us not to open the position? Is it because, of this kind of like a big move to the downside? But then what do we actually see there? Do we see a distribution on this move to the downside? Is the stock being distributed? So I don't see necessarily a lot of the distribution. They sold in right here. The price stayed horizontally. They sold in right here. The price went up. So that was observed. Then the next time where the volume influences the price is here. So there was some selling at this stop, and that's why I think that the price is going to encounter some resistance right here. But then after that, there's some capitulation here, there's limited capitulation here, but all of this looks more like buying. And the actual selling was here and here. Something that influenced the reaction. But on the way down, when you look at how the price moves, this is very laborious. And then up movement is a little bit better. And that is being reflected in the momentum. So for those of you who said a swing trade, how would you tactically manage this trade? Where would you be coming in? On the last bar? Or maybe in a different way? Last bar? Okay. Why don't we do this? For those of you who said this is a swing trade, let's keep a track of this, that this was an open position right here. I'm going to assume the stop loss is going to be just below 180, although this is such a big stop loss. Another way of entering this position is just on the breakout, local breakout. This would be a good place to enter you only have to see if you're going to overcome this bar right here. So you obviously want a huge bar, like, maybe like 8-7% rise, a bar like this, a bar like that, that actually, produces, a potential good momentum. And you want to get before this bar unfolds. So I think that if you are considering swing position, Teresa at the beginning of this class was talking about this intention to have a campaign stock and then turning into a swing position. Lately, I've been doing the opposite. I've been doing like from swing to campaign type of moves. Why? Because there are some opportunistic places where the market presents this type of value, and if the price is going to go even higher from here, then this is a very interesting opportunity. You don't want to miss this. But the way how you play it safely, you open a swing position first, and then if the price behaves the correct way, then you keep it as a campaign. So we can do that. And for those of you who said do nothing, I think it's still a prudent decision just to do nothing when you feel that you don't have any actions to take here. So which is totally fine. You are protecting your capital. But we'll see how the swing trade, how this particular swing trade might unfold. All right, some comments. Increased effort on the second to last bar with no commitment above its analog. Yeah, I was just looking at this, Dmitry. So at this, right? So we're looking at this 2 bars where supply is actually increasing. That's why we have the tail here. Now the tail creates a higher high, which is great because we're testing, right? We're testing, we're going higher, and we're testing. We are going into this bar right here. And this is where those tests of the supply are going to come. And it came, and then the next day, supply is very mediocre. So that's actually a good sign. Supply might come, push the price back to the moving average, and then consolidate a little bit more. That would create more compression, and the move up might be much faster. But also, I mean, like, there's really nothing that happened today after supply has come in. So we just have to see. It's not like what happened here, right? So it's different. Price could encounter resistance at price area in mid-May supply bar. Mid-May supply bar. Okay. Yeah, well, we are right here, right? This trading range was in that bar range. So I think that we are trying to overcome this right now, right here. Okay. Can you speak to the second last bar? We had the bigger volume signature compared to the last local high and no commitment above that level. So I think we've covered that, Eric. All right, great. Okay, well, we have one swing position and we have a long campaign position that is not open. This is where we are with the trade desk. All right. Thank you, guys. This is great. I know where we are with that. Okay, so let's come back to questions. We have 30 minutes. All right, the question from Simon. What volume signature should you be looking for in the distribution phase? For accumulation, we seek to see a reduction in volume supply signature from phase A to C to indicate that supply has been observed reduced. For distribution, what volume signature are we looking for to indicate that distribution is complete and price is ready to mark down? I have some schools of thought, but not sure which is correct. We check for the emergence of the supply at the top, swing highs. Therefore, they'd be wanting to see an increase in volume to indicate that there is so much supply that price will inevitably go down. This would would be enforced if we saw lower highs and lower highs being created on increased volume. Or we check for the reduction of the supply. We'd be wanting to see a decrease in volume to indicate that CO has supply has been distributed, marked down. Okay, or at the swing tops, do we seek to a certain amount of demand as opposed to the emergent supply? That's what Tesla will looking to assist us that demand is exhausted and price may commence if it's marked down. Both of these scenarios right here are possible. Usually when we are thinking about the distribution, we have to think about the market participants and at what spots they will be selling. And therefore, different structures are being created because of those behaviors, but there are some commonalities. So into this trend, we would be expecting that the value investor is going to be selling, taking some profits or closing out the position. So supply will naturally increase. In the stocks that were leadership stocks, the structure of the initial distribution could take the shape of the uptrending structure. And then we could have some kind of more common, more typical change of character that will be associated with the emergence of the supply, where institutional trend followers or momentum traders will be giving up their positions, and that would increase the supply. And then as we can see in value here, they're picking this up, and that would create another structure. And in this structure, we could see that maybe CO is done distributing. And just because of its own weight, the volume signature might go down, and by its own weight, the price will start dropping up, and then the volume is going to start increasing on capitulations by later hands. So there are quite a few variations as to how distribution could unfold. The key is just to recognize the presence of the distributional hands. And usually you will see this, it will be hidden from you in the volume signature and how the price behaves. Buying climax will be associated with that increase in the volume signature that will look very bullish. Price is advancing and the volume is expanding. So naturally, from the conventional TA, we're going to say that volume increase confirms the price increase. But that's not going to be so for the last climactic run, when we see the same character of the increase of the price and increase of the volume signature. So this type of action in this type of context would define the initial selling by the value investors. And then throughout the structure, if let's say distribution has happened by the CO in the first part of the range, then it could become very dull. And we kind of see this from a lot of the distributional patterns that are apex formations, TP formations, where there is an active distribution by institutions in phase A and early phase B, and then they go away because they don't have any position. As they go away, price drifts in uncertainty and then goes down. And as the price goes down, that's when the final capitulation happens. What we need to do is to recognize this type of behavior and then think opportunistically as to how to take advantage of this. For instance, when we recognize that the value investors were selling into the strength, we could take a trade on the change of character. When we see that CO is inactive, we would be anticipating a continuation of the trade to the downside, and we would act opportunistically as well. What would be examples of such behavior? Let's start with the first one. where we are seeing some value selling into the context of the uptrend and into the overbought condition. So we see a lot of the bullish characteristics where the price spread increases and the price travels up, but behind that volume signature, we already can observe that some supply is coming in and it's stopping the price from moving aggressively up at this point. So our point here is to capture the first change of character that's going to have the momentum characteristic. That was, my hedge trade in gold. So I'm campaigning gold from these levels, but I hedge right here. And then there's going to be a period of inactivity, and here it is. So the price kind of goes into the apex formation, and hopefully we're going to have that continuation. I'm already in this position anticipating, that short hedge. I'm still have long GLD. I'm long GLD. I did not buy any stocks. I just bought the ETF, the index. So this is just the way of campaigning and trying to figure out how to keep your equity curve for that position much flatter during the times when you have a reaction in the campaign like this. So it's long-term investment combined together with short-term trading. So that would be an example like this. Another example where this inactivity by institutions are very evident was right here, and was right here in the Bitcoin. Inactivity, and then that leads to the capitulation because there is no money to be made when the price does not do anything. So institutions will try to get out, and as they are getting out and capitulating, that would produce the momentum. Okay. All right. In WTC, did you not tell us that we can only confirm distribution in phase D and not earlier? From Arvin. Arvin, not necessarily that we would confirm distribution only in phase D. Sometimes distribution will become more evident in earlier stages if specific formation unfolds. So think about a hypodermic structure, right, where we have a lot of speculation on the way up. By the virtue of a speculation itself, we would be thinking that this is an extreme behavior, an extreme overbought behavior. So we probably would have the urgency to sell pretty quick. So we would be on the lookout for this type of structures and how market participants behave. If we see something like this, we would be thinking that we don't necessarily have to even confirm that we are in phase D. We could in the hypodermic formation, we could be in phase B or could be in phase C, and already be thinking that this is going to be a distribution. In another TP family formation where we have initial move to the downside that is significant, that it's up all of the profits of the last swing, and then the price goes into this type of apex formation, we would see the urgency by institutions to sell, and they would be done at this point. They would be out. The volume signature would increase so significantly, and they would sell on the way down. The value would be found by weekends, and they would be buyers, and that's what would produce that first volatility to the upside. But then after that, CO is going to be inactive, and as CO inactive, nothing's going to happen. That's going to trigger ITFs to see the deterioration in absolute performance and in relative performance, which will lead them to unloading of that position. That will produce a move to the downside on the increased volume signature. And because of that volume increase, momentum is going to increase to the downside. So therefore, it's kind of the same way how the distribution unfolds. We really just have to figure out the top part, right? The bias and the timing. The timing is much easier because we could use synchronicity, we could use timing on phases, we could use structural things where we see the commitments to the downside, you know, and less commitments to the upside. We could think about the structure in terms of the events as well. So there are quite a few ways, you know, to think about distribution. But in some cases, it will be more evident even in phase A that this is not a reaccumulation but a distribution by the way how the price behaves in phase A. And in some instances, it's only until phase D that we would have to wait. Okay, interesting. Francis saying beyond mean. Okay, let's see. That was on my list of stocks to look at today. Here you go. Yeah, so this area right here, I would probably even just try to look at. Can we do that? Let's not put on. Yeah, here we go. Well, I think it's going to be an interesting stock of a year from now. Why? Because, well, there is a lot of interest that we see in the stock. And there was a lot of speculation, so that's going to be a speculative stock. But for now, we are not interested at all. For now, this is not an opportunistic stock. For now, it's only opportunistic to the downside if you're looking, you know, to short the stock. And this is actually a really good opportunity to short because the momentum is just unwinding on the downside, and you know, all of those players that were getting into the stock, they are slowly getting out. How were they getting out? Okay, value investors were getting out here, 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 and here. And then they were done. The only other time when they occur on the scene was here. This is a late capitulation, and I would be expecting that there's going to be some kind of more general capitulation from here as well. Please note that once they sold into the strength, you know, and Franz, thank you for this example because that's exactly what I was describing, right? So selling it as value investors and then being inactive and then pushing the selling again, and that's what produces this. This was a really good short. This was a really good short right here, then here again. I was not looking at this. That was a very easy short, just the whole story. This looks like a cannabis stock, like ACB. Let's look at cannabis stocks. ACB. Yeah, I was trying to get into those stocks, and I was trying to do it right here. Well, you guys know because I mean we were trying to do that. Yeah, yeah, and that was just not there. So we would be thinking that the value. I mean, somebody who was buying before probably getting out somewhere here, and then inactivity. Yeah, a mistake right there. We'll have to think about that. I think it's just because of the lodge structure in general. Those lodge structures are much harder to think through. Okay. All right, let's see what else we have left. There was, I think, one or two more questions. Okay, so from Ronnie. Log scale versus non-log regarding change of character when looking at trends. Reason I ask is that sometimes when looking at charts in a non-log scale, what seems to be a change of character is not a change of character, and when switching to log scale, is there a rule of thumb to when to use it? It's kind of interesting because I was discussing this today with somebody. Okay, so let me just think about the stock. Well, I'll just come back to our trade view. Okay, so let's put it so let's look at the change of character, right? So where are the changes of character here? The change of character is here, here, and then here. So obviously the price goes up, right, from $20 to $280. So the percent change is so different. Here, this is a 100% change. The same travel on the chart itself is only 20 bucks on 260, which is what, about maybe what, less than 5% or something like that. So it's a different scale based on the percent. And obviously that would produce some kind of hesitation if you're looking at the changes of character this way. Having said so, you could do this. You could be thinking like, okay, let me just look at the change of character from a different perspective. I want to look at it separately and just to figure out what was the impact here. So from 65 to about 40, so that's $20, so minus 30%. So this first change of character, which is the significant change of character, you kind of understand what kind of reactions into the deep oversold condition you might have. When you go to the next change of character, you can analyze it the same way. You could be thinking here, okay, what is this type of change of character relative to this one? Let's say just price-wise, 160 to 100, that's about 30% as well. So what is different then? Nothing, right? So you kind of thinking that this is probably okay. Now this latest change of character that we have had from 280 to 180, and then again it kind of feels that this is minus 30% or close to that. So there is really nothing yet that has changed drastically. Then you want to compare obviously each changes of character to what kind of supply signature and what kind of texture we had here and what came afterwards. So looks somewhat similar. Okay. Okay, Ronnie. So the rule of thumb is when you look at the changes of character, is probably start with any chart that you use, and then go into more details and look at the changes of character in each of the reaccumulation and compare those. Compare those on the percent beta basis, compare those on the volume signature basis, compare those also on textual characteristics. How is the spread behaving relative to what we've seen before? What kind of development we have after those changes of character? I think it would be very telling. Okay, and I believe there is one more question, and then after that we're gonna stop. Okay, I've rewatched the WTC webinars and I'm still a little confused regarding a change of behavior and a change of character. My definition of the above are as follows: change of behavior in the context of the uptrend. This is when the reaction behaves differently to previous reaction in the prior uptrend. Increased price spread, deeper reaction magnitude. Correct. Change of character in the context of the uptrend. This is when we observe the structural change. For instance, price moves from the uptrend with the change of character confirmed only when the secondary test is observed. Correct again. Question: in the above bias games, during your explanation, you advised of the changes of character and changes of behavior as per chart annotation. I thought change of character annotation was the change of behavior, as this is a reaction and will not be observed in the prior uptrend. Additionally, we've not observed the secondary test to confirm a change of character. Okay, yeah, I understand the question. And I kind of use it sometimes intermittently, but here I think it was important because I was identifying a change of behavior and I was talking about the change of character. A change of character is going to be a structural change. That's the main thing to remember. Again, how does change of character, change of character came about, a change of behavior? So Hank in GGU classes talked about a change of behavior. This is not necessarily the acronym that he used. He was just talking about the change of behavior. And when I talked to him about this concept, he usually would talk about change of behavior in late phase B. It's in late phase B where you have, let's say in the accumulation, the rallies that are going to start show different characteristics like momentum increase, demand increase, and that would be considered a change of behavior from what he could have observed in the trading range before. The change of character, the concept that was intermittently used with the change of behavior, and there was no really like a very good determination as to what one is and how they are both different. So change of character was very easy to kind of nail in this sense because change of character suggests that we have different type of characters with which the price moves. A downtrend, a consolidation, an up move, and they usually, those environments or characters are going to change as we go into different environments. So we needed to identify behind the change of character terminology something that changes the structure. And it was not a change of behavior. It was not a single rally. It had to be confirmed by some kind of test. So therefore, we had an automatic rally and secondary test as a structure of the change of character process itself. This is a true change of character. Having said this, on the automatic rally, we are going to have a change of behavior. Why would we have a change of behavior on this rally? Well, spread is increasing, volume is increasing, demand is increasing. We might have some gaps to the upside, and so on and so forth. Those are elements of the change of behavior. Instead of selling, now they are buying. But if they are buying, has it changed the structure itself? We might have situations where some buying are not necessarily going to produce a change of character. It just produces a temporary change of behavior that later fails. So we really need to see the confirmation where the secondary test happens and the price goes up instead of failing. And that's the biggest distinction here. What are we looking at here, right, in terms of the changes of behavior and changes of character? So we're very obvious change of character here. Why? Because all of the previous reactions are smaller. So therefore, a change of character where we are going down, we're going up, trying to retest, and we can't. And that kind of identifies phase A in this range right here. But then we could say that a change of behavior is happening here on this rally. Instead of each rally producing the new high, this upthrust rally is not. And that's a change of behavior. And then another change of behavior, instead of going and producing more kind of like stable reaction, we actually have a reaction where we have a lot of supply. So that changes the whole outlook for us on the whole thing. And it's not structural yet. We would have to have this and then a very weak rally and the continuation to say that this was a change of character. Instead, we have a change of behavior, and yet we are seeing, a move to the upside here. Okay. Eric is saying, and I like this, I understood that the change of behavior was like a warning that potentially lead to a change of character. So in a way, yes, we could say that, let's say a sign of strength rally is going to have a change of behavior characteristics, but it's only after the backing up action and confirmation that the price actually is going up. This is where we are going to have an actual confirmation that the structure has changed from a non-trending environment to now a trending environment. And that's your change of character. Change of character is this. Change of behavior is the rally. Change of behavior is the reaction. Okay, good. I like those simple questions where we have to think deeply about why this is the concept and how it unfolds. All right, guys. So a homework for us. Obviously, the anatomy of the trade. So for those of you who are in the swing trade, in the trade TTD, make sure that you analyze the trade. Send me your analysis. For those of you who are not in this trade, well, just keep observing it. And then obviously a bias game. This is the slide. This is the trading range that we look at. We are 50-50 as a class on the distribution, redistribution or accumulation. Go through this. And what I kind of want to see is you guys, like with Simon, start creating the process as to how do you analyze the bias. I've given you the process in WTC where I ask you to go through the bar analysis, through the swing analysis, through the price structural analysis, and through the market participants analysis, kind of like the Wyckoff story. So try to engage yourself in that process where you're thinking about all of those elements. And let's see where it's going to bring us. All right, guys. I think that's it. Let's look at the last stock, last request, and then we'll adjourn. Okay. Again, look at the whole story, right? Don't look at just what happened just recently. So obviously, kind of the same idea here, right? As we were talking about the TTD, but slightly different. Why is it slightly different? Okay, so we see here a touch with the moving average. We kind of are thinking about this place, but the way how the price behaves is, somewhat different, right? So we could see that this is a little bit dramatic move to the downside. There are some elements of the stop in action, but the way how the price moved down is somewhat different. Let me go back here. Look again at TTD. How does the price move? Is there a lot of aggression to sell on the way down? Just one bar maybe in the middle, nothing else. For the cyber arc, it's a little bit different. Look at how much selling we have here. Selling, some pickup here. But what kind of rallies do we have? This is very mediocre. And we are kind of trying to be below the 200, the long-term moving average. So I'm not sure if this is similar to TTD, unless it starts proving that it could go up. So I would be on the lookout. There's definitely some value selling into the strength, and then you have this, unwind by the trend followers. I would need to see some kind of more confirmation, like a really good bar. Although I like how the momentum is starting to trend up. Actually, yeah, so more selling here, less selling here. What was being sold? Only here. This is demand holding up. Actually, if we're gonna have a bar like this, that's gonna be an interesting point of view. Let's look at the log scale and see how that looks. So it's such a huge causality that we have had in the stock for quite some time. So that requires some time to unwind. I would be thinking that even though this was a very significant reaccumulation, we are probably just, still in a much kind of like larger uptrend. This short-term weakness, I mean, if it's going to fail, then that's it. We are done with the price cycle. But if it's going to try to continue going up, then we could be still in this larger cycle here. So we need to figure out the conditions here. Are they going to be more bullish or are they going to be continuously bearish? Momentum will have to break out, because out of those short-term conditions, again, we're going to look into this in the November special. Like right here, you want to see that breakout. Here, breakout. So if we have a breakout on that type of bar, that could be, a pro position with expectations that the price could go up. But I would definitely wait. All right. Okay, guys. Why don't we stop here? Yes, good session. I liked it too. There's a lot of information that we went through, kind of a lot of spots that we thought about, in kind of like a deep way from different angles. So keep inquiring, keep being inquisitive, send the questions, look at the charts, think about the charts, think about what kind of questions you have about the charts. The more questions we go through, the more knowledge we accumulate. So the better we are as a community. All right, guys, thank you so much. I'll see you next Tuesday. Bye-bye.